When taxpayers have been out of compliance for filing U.S. tax returns for multiple years, a common question that runs through their mind is whether they should file the late returns or should they just avoid it altogether, hoping that nothing happens. Obviously, the IRS is not the most well oiled machine, and many times taxpayers can go a long time without getting caught if they don't file tax returns. The problem is, if the taxpayer does get caught down the line, then it could become a much bigger issue than it is. So, oftentimes, it's better to put out the fire when it's small than to let it turn into a big inferno. If you're out of compliance for filing prior year tax returns, what process you go to file them will depend on how much unreported income you have, were taxes withheld, do you have foreign accounts and assets, do you have unreported income. Here's an example. Let's say you're getting W-2s every year, so your income taxes are being withheld and you have no other income. Well, you miss some returns and that's not great, but by time you file, you may not have any tax liability because um, taxes are being withheld through your W-2, and penalties are typically based on the amount of outstanding tax liability. Conversely, if you're self-employed, if you're living overseas and you have a lot of unreported income and accounts and assets and taxes weren't paid, estimated taxes weren't paid, you might have a much bigger tax liability. There are various programs to help you get into compliance when you have unreported foreign accounts, assets, and investments. So something to think about. But in general, getting into compliance is better than just not getting into compliance, and the risk increases every year that you don't file.